Hello, this is Running Robert, and today we're going to be talking about the Inovio Pharmaceuticals INO second quarter 2025 summary. Today is the 13th of August 2025. Quarterly report came out yesterday, so we are going to look at the bullish and the bearish parts of it. I generally follow small cap pharma. I do games. I do a little bit of everything. So if you like what I'm doing, hey, please like or subscribe or super thanks. Everything helps, and thank you. Disclaimer is I own stock. I bought it at $1.33 after my last video and some options at $2 on the 20th of February, 2026. I bought them for 20 bucks an option. That's just extra. I'm an amateur investor and any advice given should be followed up by own due diligence, and any information given is valid for today, the 13th of August, and the slideshow will not be updated, but as we get new slideshow. So let's get into the report. So they're on track to finish the BLA and to have it accepted by the end of the year. They have requested a rolling submission, which is pretty much they can fill out the BLA in parts with FDA help. And then when the FDA accepts it, you get your review time. The company's also going to request a priority review, which is a 6-month review instead of a 10-month review. Now they have orphan, they have breakthrough, so these should be accepted, both of them. But we'll talk later what happens if not. R&D was 14.5, admin was 8.6, which for about 23 million. The company had 47.5 million at the end of the quarter, but with the July offering, which is 22.5 million, the company had about 70. Now, if those warrants are fully cashed, and they cashed at $1.75, that would put the company around 92 million. So based on this information, the company has money to somewhere in mid-2026. So why am I covering this stock? So INO 3107 is a rare disease. Treats a rare disease that impacts around 14,000 people in the US. It is caused by the HPV virus. Pretty much you have wart-like growth in your throat. You have to have surgery to remove it. It grows back after surgery. Surgery is the standard practice of care for this. Being a rare disease means most treatments are between $200,000 and $600,000. So let's just take, for example, we have 500 people who take this for a year. That's 400, at times 400,000 is 200 million in sales a year. You're looking at what the company spent. It's not even close to that. We also need a very small marketing team, and overall reaching patients should be fairly easy. So they expect 300 to 400 doctors. So you could do it with 10 or 20 salespeople and not really put a lot of extra cost onto your company. But what has caused all this? So they had solid data. And when I mean they had solid data, the FDA said, hey, you don't need to do a phase 3 trial. Do a confirmatory trial and we'll call it a day, which is incredible. But when you see the data, you're going to understand why. So in their phase 1, phase 2 trial, 81% of the patients required fewer surgeries, with 28% requiring no surgery. So what happened is they looked at how many surgeries they had before. That average was 4 surgeries a person per year. And then they got on the drug. 81% of the patients had less surgeries. 28% required no surgeries at all. So you're going from an average of 4 to 0 in some people. That is really strong data. And it was even better at the 104-week follow-up. So they took second year, and what they found is really 86 for partial and up to 50% for no surgeries. There are a few people who didn't follow up, and they were counted as negative for this. Of the 6 patients in that year trial, 4 did not have any change in surgeries, while 2 had +1 while on the drug. So though if it's working for 26 out of 32 people, that's pretty nice. And here's where we get even more good information. So the surgeries, again, average 4.1 per treatment. They looked at the previous year. They said how many surgeries you had, and were an average of 1.7 at the end of year 1. And 0.9 at the end of year 2. So you went from 4 surgeries a year to an average of 1. Now you can kind of see why they have all the designations, why they don't have to do a phase 3 trial. It is solid data. But the one unsolid part of this company is the cash situation. So the cash was 70 million at the end of quarter 2, 2025. That is with the July offering. The expected operating expense is going to be between 20 and 25 million. They said 22 on the call. But we're going to give them a little bit of a range. The company did place a $25 million public offering, which also comes with 25 million in warrants. Those are cashed out at 175. My thought personally is that those warrants will pay out. They will get their BLA information, and they're going to jump to a point where the warrants are going to cash. With this information, the company has 3 solid quarters without warrants and 4 quarters with the warrants. And that's 22 million, times 3, 66. That gives them a little bit to get into what I would consider the mid of 2026. Obviously, if they get the 90 million that we were looking at earlier, then you're even in better shape. I do expect a cash raise on approval, or if we do see a jump in the stock, so it decides, the BLA goes up to like 250 or 3, I would also expect an offer at that rate. What could go wrong? So this is, all of these are worst case scenarios. I don't think any of these are going to happen, but I guess they could, so we have to talk about them. So 1, they're unable to get a rolling submission. This really would suck because that would just take extra time to finish the BLA. So instead of having it accepted by the end of year and having a 6-month date, that means it might not be accepted till sometime in the first quarter. And then now we're definitely having like a Q3, Q4 kind of FDA meeting. Second thing is extra time to finish the BLA. They are a small company. They do not do a lot of BLAs. So this could be an issue that they are trying to go for year end, but they just can't quite make it. And then, of course, having a 10-month standard review cycle instead of the 6-month, again, that is going to push that back. And like I said, based on the breakthrough designations, all the orphan drug status, everything like that, and the results itself saying that, hey, this drug is solid, I can see them doing a 6-month because they do not have to they really don't have to dig into the data. The data is solid. All of these cases are, again, worst case. Some of them might go together. If they're unable to get a rolling submission, it might take extra time to finish the BLA, and they might get a 10-month instead of 6. So that is the worst you're going to go on. But again, I think what we're looking at is probably, at worst case, a late 2026 or early 2027 approval. We're still open for mid, but that is kind of like the worst case. So the company would need 2 quarters extra of cash. So not really a lot of extra information in this, but we're going to be waiting for the BLA acceptance and a PDUFA date. The hope, again, is going to be 6 months, which would allow them to make it through with the cash raise. If they get the BLA before year's end and it gets approved and you're looking at a April or May PDUFA date, you're pretty good. Company's already gone through the FDA inspection. All equipment data is back, so there's really nothing preventing this from approval. And that's what we worry about with small cap pharma, is that, hey, they haven't gotten the inspection. Maybe the data is not good. There's something else underlying. They have other boxes checked. So I believe that we're in pretty good shape. I believe the risk in stock is low, with a good chance of making a major profit, which means 100% or more, especially with a market cap of 70 to 80 million. And you looked at the numbers before for sales. They are great. They could be really great. This company could easily be worth or sold for $1 billion based on just that. So hopefully all this information helped. Thank you very much for watching and listening, and I hope you have a wonderful day.